All right, welcome everybody. We'll go ahead and get started. I first want to say good afternoon. My name is Cora DeMarco. I'm the chair of the board of directors at the Greater Sudbury Chamber of Commerce, and I'm the manager of human resources and people development at Technica Mining. On behalf of the Northern Chamber Network, it is my pleasure to welcome all of you to the webinar today. I want to begin by acknowledging the Indigenous peoples of all the lands on which we gather on today. While we are meeting here today in a virtual platform, I'd like to take a moment to acknowledge the importance of the lands which we all call home. We do this to reaffirm our commitment and responsibility in providing relationships between nations and improving relationships between nations and enhancing our own understanding of local Indigenous peoples and their histories and cultures. From across the province, we acknowledge the ancestral territory of all the Inuit, Métis, First Nations people that call this land home. I'd like to extend a special welcome to our guest speaker, John Stackhouse, Senior Vice President, RBC, who will be formally introduced a little bit later. Thank you, John, for joining us today. Today's webinar is proudly sponsored by Thunder Bay's Inner City Industrial. Thank you very much for your generosity and support. We value your commitment to the Chamber and the work that we do. Without your support, events like this could not be possible. Now it gives me great pleasure to introduce John Stackhouse. Mr. Stackhouse is a national best-selling author and one of Canada's leading voices on innovation and economic disruption. He is a senior vice president in the office of the CEO at the Royal Bank of Canada, leading the organization's research and thought leadership on economic, technological, and social change. Mr. Stackhouse was editor-in-chief of the Globe and Mail and editor of Report on Business previously to his role now. He is a senior fellow at the C.D. Howe Institute and the Munk School of Global Affairs and Public Policy, and sits on the boards at Queen University and the Aga Khan Foundation of Canada and the Literary Review of Canada. So we're super thrilled to have just a few moments of his time today. Mr. Stackhouse's latest book, Planet Canada, How Our Expats Are Shaping the Future, explores the untapped resource of millions of Canadians who do not live in Canada, but exert their influence from afar. Today's Fireside Chat will be inspired by the following two RBC Thought Leadership reports. The first entitled, And Now the Reset, 9 Ways COVID has changed consumers and businesses and the decade ahead. And the second, Trading Places, Canada's place in a changing global economy. So thank you, John, for joining us today. And I'd like to turn it over to you to make a few remarks to set the stage for the chat this afternoon. So please go ahead.
Yeah, thanks, Cora. That's a very kind introduction, so I appreciate it, and I'm grateful for everyone spending time in this conversation. Sorry we're not together in person, but I think we're going to get closer to that day. In fact, it's accelerated, and I think that will be part of our conversation today. It's all about the recovery, how things have changed, and what we need to prepare for. So I'll talk for a few minutes, maybe share some thoughts and insights that we have from RBC on how 2021 is shaping up, and then happy to talk to any questions that you'd like. Before I get into that, though, I was grateful for your Indigenous land recognition, and want to add to that the remorse we all have over Kamloops, and more broadly, what it is telling us about the residential school experience in this country. And this is such an important national conversation that we're all part of, and we need to be honest with each other. You don't get truth without honesty. And this is National Indigenous History Month, so a good month, a good day. Any day is important for this, but maybe for us to focus a bit of our thoughts even more on what we need to do in a positive way for reconciliation, which I know is important. I hope we can talk to this. It's a really important element of northern development and an opportunity for Canada in our view. So happy to share thoughts on how we can maybe go about that constructively. Let me start with some thoughts about growth. Hard for us to think that that things are growing when we're all kind of still restricted, but this is changing very quickly. And one of the points I try to stress to audiences is that the speed at which we shut things down last year is also the speed at which things are going to be opening up. And we all have to, as business operators, as neighbors, as participants in this, in the economy as well as society, we have to be prepared for some pretty big shifts that are going to take place over the coming weeks and especially the coming months. We've got a strong economic outlook for the remainder of this year, and this is going to play through in demand for all sorts of things, including what your region produces. You're already feeling this. So let's be prepared for more of that. That's going to lead to pressures on all of us as business operators. The number one pressure that we're thinking about and talking to clients about is talent. The labor shortages that we are seeing in the United States are going to play out here. They already are in many sectors. And I'd like to remind people that the talent war that we all talked about in 2019 is going to come back with a vengeance in 2021 and 2022. Those rare talents that we all want, whether it's digital programmers or skilled tradespeople or professional managers, are going to be in more demand as things recover. And the supply may not be as robust as we think, because people have got kind of the YOLO disease, you only live once, and thinking of options. I was in conversation with a leading CEO last week, a leading Canadian CEO, who said he had just lost one of his senior vice presidents who decided he wants to be a bush pilot. That's his life dream. He's already been piloting. He says, you know what? I want to spend the next few years as a bush pilot in northern British Columbia. Sayonara. So a little signal of probably what we all should be prepared for. This can be very good, but as employers and business thinkers and leaders, we need to be prepared for a talent war in a new kind of environment. We're seeing shortages. It's interesting to see the Quebec government has announced financial incentives for people to join the tech sector. You wouldn't think you would need to incentivize that, but they need to get 10,000 people to move very quickly into tech jobs. We're seeing that in other parts of the country as well. Firms like Amazon offering $1,500 signing bonuses. Partners for us like Microsoft and Google offering really good certification programs. So in 6 months, you can learn how to be a cloud computing worker. How do we help Canadians get into those programs, but also how do we build those programs regardless of where we are in the country? It's something we at RBC are thinking a lot about. What do we need to keep in mind for the recovery? And Cora, thanks for flagging 2 reports that we've done that we think help inform this conversation. The first one looks at the 9 big trends that we've seen and have heard from in our conversations with clients across the country. And I'm not going to go through all 9, but I want to touch on a few that I think are really important for people to consider as they think about their plans for 2021 and 2022. First of all, to state the obvious, digital. And it doesn't matter whether you're a retailer, a restaurateur, or a resources company. The digital revolution is playing out in an accelerated manner across the country and across all sectors. So if you are not investing in digital strategies, first and foremost, in building a digital culture in your firm and in hiring digital talent, you're probably going to have some regrets in the years ahead. We got a good insight from this from a major executive in Eastern Canada, New Brunswick, who's in the forestry business, so you can guess which firm that is, who said like their number one need now is for loggers and truck drivers. And both professions require digital competencies and data competencies, because if you're driving a truck, you're going to be a data operator. If you're cutting down a tree, you got to understand data, because there's all sorts of systems that are working with data that you are going to be part of. So a little signal of where things are going. We're seeing that in our business. We're seeing it in most of our, or hearing about this from most of our clients. So digital. Secondly is what we would call re-globalization. not deglobalization, but reglobalization. And our other report that Cora mentioned, Trading Places, looked at the growth of a North American trading strategy and how under the Biden administration, this is not just because of COVID, but the shift in American politics, that is going to lead to more America first, but we think a bit more North America first, that Canada can play a very strategic role in. And this is critical for Northern Ontario, which is a source of so many critical resources that will be part of this North American industrial strategy. This is not a 20th century industrial strategy, it's 21st century. That's going to focus on advanced technologies, semiconductors, electric vehicles, products for the future, for a greener economy that are going to require a lot of resources, different kinds of resources, but resources that are also produced in a different manner. And that includes with a greater emphasis on ESG. It's not just environment, but it's the social inputs to the production, both of resources and final products, that we think Canadians are exceptionally good at. And we have to broadcast this much more effectively, especially to our American trade partners, to say, if you're buying something from Canada, that actually makes America stronger economically, but stronger as well socially, and plays to the values that so many Americans want, and that Canadians also seek in our own, in a different Canadian way. So we think reglobalization, a stronger North American economy, a little bit more of a continental approach to trade and industrial strategy, especially for new and emerging industries, is a critical opportunity for all parts of Canada, but particularly for your region. Third point, and the final point, Cora, that I'll mention that we think is important to reflect on coming out of the crisis is trust. Trust has been eroded through this crisis. We all feel that in our daily lives. But trust in business has actually grown through this crisis. Not in all businesses. Plenty of businesses have not performed well. But in aggregate, business has done very well in the public's mind through this crisis by managing change, by being resilient, by largely being good with employees and helping communities through an extraordinary period of history. We can't take that for granted. But as business leaders, how do we continue to invest in that trust, but use that trust to help our communities move to better places in the recovery? We can't leave things up to government. I don't think governments want that actually coming out of the recovery. Governments have done a lot of incredible things in the last 12 to 18 months, 12 to 16 months. It's now time for business to step up, not just in a free market sense, but in a community leadership sense, to say, here's how we can build our communities, here's how we can work with partners to build stronger communities through the 2020s, but to build a more resilient economy through the 2020s. That, to tie on those other points, is both more digital and more aligned with shifts in the global economy. So, Cora, some quick thoughts to share, to plant with the audience, and again, grateful for the invitation and for you including RBC in this conversation, and happy to turn it over back to you for discussion.
Great, thank you. And I think that provides a good foundation point for those that haven't had a chance to maybe read the report and sort of whet their appetite for the discussion we're having. So thank you for giving that overview. The RBC's and now the Reset report notes people will be spending more time at home, investing in remodeling and upgrading their homes, ultimately leading to a higher retail price that some of us have already experienced in our own backyard. And we're seeing this across the country, particularly in the regions driving Canada's economic growth. In particular, the GTHA, Vancouver, Montreal, which I want to follow up because of this trend on a couple questions surrounding that idea. I guess where I want to start is real estate prices in these major cities. Ultimately, we want to know if they're beneficial to smaller cities like, for example, Sudbury, by allowing us to compete on a lower cost of living, or do you think that those rising costs will spill over into Northern Ontario?
Well, it's a great question, Cora. I know it's top of mind for many of us. And markets go up and they go down, and there are supply and demand factors that modulate over time. But over the long run, we think Canadian real estate remains a strong investment. The growth of the economy, the growth of population, including a return of immigration, will remain as strong tailwinds to the real estate market. But something has changed in the pandemic, and that includes the redistribution of work. I mean, just what we're doing now was inconceivable probably to many people 16 months ago, and now it's very normal. We're seeing this in our own operations where people are working from different places. We want them to be not anywhere. They need to be accessible to what we call talent hubs. But we're seeing opportunities for people to work and for teams to work in different parts of the country. And we're not the only ones in this. This is a huge economic development opportunity for communities to say, not just to individuals, but to talent teams. You know, you could locate in this center, provided you have the infrastructure and all the community goods that we look for in location, that could be an advantage to people. So I'm encouraging communities to think of economic development as a people play, not just an investment play. You're not looking for factories, you're looking for collections of people, knowledge workers who may be wanting to locate. Secondly, think of that YOLO phenomenon that I mentioned, that many people are going to be scaling back the amount of work they do. And this isn't just retiring boomers, it's also a younger generation that's looking for a different work-life balance. And many communities offer the opportunity for that. So that all plays to the demand side of housing. On the supply side, this is a big driver of pressure in the Canadian market. Our supply is not growing fast enough, and there are geographic constraints as well as community constraints in our major cities, and therefore an opportunity for smaller centers to create housing stock that may be more affordable for people who then have the technology as well as the aptitude now to live and work in different places.
Interesting. And you touched on a little bit of what's my next consideration is around the talent attraction. We know that talent attraction remains a huge issue in across the country, particularly Northern Ontario. We've, as a country, we have a relatively small population given both size of population in comparison to our economic peers. And we are attracting a lot of international students, as we know, and hoping to build enough housing to support them. Do you think that that's a realistic possibility for our region? And then maybe consideration of, are the real estate prices ultimately going to hurt us in the long run and deter people from joining moving to Northern Ontario?
No, I'm glad you mentioned students, because a big draw in this, we see this around the world, to talent hubs is education centers. Colleges and universities, by their very nature, attract young people. That makes communities more vibrant. That attracts other young people because they like to be around young people. But it also leads to a proliferation of knowledge, of experimentation, of research and development that is exciting, contagious, and attracts other industries and grows businesses. So we, as a country, need to continue to invest, and in fact probably invest more in post-secondary education, not just for education's sake, but as a key engine of economic growth in a post-industrial age, and ensure that those education centers of excellence are in kind of all regions of the country. Northern Ontario's got some terrific institutions, but we're all well aware of some of the challenges, particularly for one of them, and that's not an isolated situation. So it's a good challenge for us to continue to think through how to help colleges and universities thrive in the years ahead. International students is a key part of that formula. So getting back at international students, getting them from more countries, diversifying or sourcing, but then critically helping international students stay, because too many leave. And I'd like to say we've trained them to live through 4 winters. Surely that makes them qualified to be and to want to stay for 4 decades. So how do we create those opportunities, especially in the places where they were educated? Well, entrepreneurship options and employment are critical to that. So extending education to employment and entrepreneurship is going to be really important to growing and youthifying, if you'll accept that word, populations in your communities is something to focus on in the years ahead.
So thinking about how, the pandemic has, you mentioned it, changed sort of how we operate, and when we think about people, international students coming or landing in our region, the pandemic has altered that in a way for a period of time. What do you see as some of the more, if any, permanent shifts going forward in our community as a result of, post-pandemic world, and something to consider for in the context of real estate and economic development?
Well, there's certainly an expectation. We see this, and I'd be interested in what your perspectives are, but we see this from a talent point of view, an expectation for hybrid models. People, and this was not new, it was already a force before the pandemic, but I think we've all come to become very good at working from different places and collaborating from different places. And as we return to office environments or premises environments, employees, and we see this at RBC, are going to want to have a greater say in how they structure their weeks and months and days. And that's a net positive, but as employers and as communities, we've got to ensure that that we're helping people do that, because teams and the economy thrives on teams, because innovation is a team sport. Teams often thrive when people are together. So how do we create the tools and technologies as well as the culture for people to collaborate, whether they're in person or at a distance? We're trying to develop this as an organization, but I think centers, particularly in regions like Northern Ontario, have an opportunity to encourage people to be part of bigger networks beyond the community, global networks or national networks, and whatever they're doing. So you can attract talent to your place, but also your residents, and especially young people, will have an opportunity to work for new employers. Shopify, for instance, is saying, you can work for us from anywhere. So I hope the message is going out to high school kids in Thunder Bay or in Sioux Lookout. You could have a great career in Shopify. It's an outstanding company without ever leaving Thunder Bay or Sioux Lookout or RBC, if that's your preference. So opportunities for young people to stay in place for all the good reasons that go with that, should they choose. So let's make sure that message is getting out through the school systems to young people, but also is integrated into economic development.
Okay, thank you. I want to switch gears a little bit in relation to looking at the Trading Places report. It notes the benefits of Canada given the US's recent economic policy goals under Biden, which you cited earlier. But what are the lessons for us from the Trump years, given reopening NAFTA and the pandemic partnerships? Like, is the US a dependable and trusted partner in the long term, given the political volatility? What's your take on, getting involved there?
Yeah, the US is a good partner and an incredibly demanding one. And I hope Canadians have come to grips with that. Nothing wrong with that. They fight for America's interests. So let's not be naive to that, and let's get better and better at fighting for our interests and helping Americans, to my earlier point, see that is in their interest as well. One of the challenges with the Trump years is how protectionism became a bit normalized. And we're seeing this acutely with tariffs that were imposed on Canada for national security reasons, which is just kind of bizarre and unacceptable. But those have remained, and now interests a bit. This is, any history student knows this. The tariffs lead to interest groups in society that then fight to maintain them. So once created, very much harder to undo than people anticipate. We're seeing that now in real time as Canadians, whether it's in softwood lumber or steel and aluminum. So we have to fight to get rid of those tariffs. And help Americans understand that, whether it's your home renovation or the cost of an automobile is going to go up if you are tariffing your good partner Canada on this. I think we also need to do a better job of helping Americans see that ESG value of what they get from us, whether it's oil and gas, lumber, minerals, or services, that when you're buying Canadian, it's actually adding to the value set of whatever America is both producing and consuming. The onus though is on us. Like, it's a 10-to-1 relationship. So we can, bellyache all we want about how unfair America may or may not be towards us. They're not going to lie awake at night worrying a whole lot about what Canada thinks. So we have to get that message out to Americans that this is in America's interest to have more open trade flows with Canada.
And in thinking about that, either we work with them or get over our differences and work with them. Are there any other partners we could look at as well? I'm thinking particularly about China. I mean, some would argue they're even less reliable than the US. What's your take on engaging with that partnership as well?
Yeah, Canada has always done well as a multilateral trader, and we're a trading nation, so let's be proud of that. But as much as the US is overwhelmingly our number one trade partner, 75% of what we sell goes to them. That's not going to change radically in the coming years. But the other 25% is going to parts of the world that are fast growing. That includes China, that includes India, but it includes a host of other countries, Vietnam, Indonesia, Nigeria, Brazil, that are big consumers of what we produce, whether it is agriculture products or minerals or forest products, lots of what or technology products. Lots of what we make is going to be in demand by those other countries, and increasingly what we make is increasingly IP driven and services driven. We need to appreciate how much of an export services is, and that includes education. So back to your point about international students coming here, we often don't think of that as an export. That is an export driver for Canada. So when we get students to come to Laurentian or Lakehead or any other school in the north, that is export revenue for Canada. So how do we continue to grow that export opportunity and to look to these other countries, Vietnam, Indonesia, India, as sources for export revenue, as well as China? Like, you asked pointedly about China. China is a tough but good trading partner, and we've got some serious challenges to continue to work on with China. First and foremost, the release of the two Michaels. But long term, it is in China's economic interest to continue to trade with Canada, and it's in Canada's economic interest to continue to develop a more mature trading relationship with China, and to ensure, and this will be my last point on this question, to ensure that all of this is within a rules-bound multilateral trading system. Because without that, and that can sound a bit bureaucratic, but without global rules and norms for trade, smaller countries like Canada are always going to kind of be taking elbows to the face in the corners of the trading rink by the bigger players, and we need referees and rules to call that out.
Yeah, fair enough. And that reference of elbows in the face couldn't be more relative to last night. And my next question. So thinking
Let's move on.
Okay, so sore spot.
Yes. Yeah, I grew up in Toronto, so it's kind of used to it.
I know. There's a lot of violins around playing. The idea that there is a divide between large and small business, just like there's a divide between trading partner norms. The pandemic's really placed an emphasis on digital economy, and there's a systemic boost in e-commerce. And then we have small business competing on a global platform against Amazon and other tech giants. Do governments need a similar policy protection or rule book in place to compete so that there's a safe or I guess equally established norms for I think of a small business in Northern Ontario offering services or products on a global platform competing against none other than same-day deliveries,
Yeah, no, it's a great question. We need, and global platforms have created so much economic opportunity, including in communities across your region. But we do need to kind of modernize a lot of our rules. That includes around data, includes around taxation. It includes around monopolistic practices of some of the platforms. And back to the multilateral point, Canada can't do this on our own, but we can work with like-minded countries, and that includes the United States, but it includes Europe, it includes Australia, to establish kind of rules and regulations that are fitting for or fit for the 2020s in a post-pandemic economy. So let's get on with that. But as governments establish a new kind of set of rules for the platform economy, let's continue to encourage entrepreneurs, small and medium-sized business, wherever they are in Canada, to seize on the power of the platforms to reach global markets. One of the lessons of the pandemic is that just as we can all buy anything from anyone from anywhere, we can also sell anything to anyone, anywhere, anytime. So how are you, whatever your business is, thinking about your customer in Nigeria today and making sure whether it's through Amazon or Shopify or other platforms, connecting with them? What are your data strategies to understand where those customers are and what their needs are, even before they may know them? And Canadians, as much as we are an exporting country, we often don't think ambitiously enough in terms of global markets. So whether your business is in Kenora or Vancouver or Toronto, how are you thinking with that kind of 10x mentality that I can grow my business 10x, but I've got to think of a much bigger market than the one that I see outside my window? Well, the platforms are the ones that are going to get you to those markets.
Interesting. That's some good insight. I think we also need to sort of keep in mind that some of the points that you raised earlier in the opening remarks around like the focus on moving to a digital space, establishing or reestablishing trust that you cited is eroded significantly. And the idea of that North America first, that re-globalization that seems to be a very prominent idea coming out of the pandemic. So with that, I'd like to change gears slightly and talk a little bit or gather some questions from the audience. There are some questions already logged in the Q&A box that participants have submitted. So if it's all right with you, we'll move to hear from some of the participants on their questions. One of the first ones that came through and relevant to today, especially considering the news that the unfortunate news that we heard yesterday, this comes in. John, please share your perspective on economic reconciliation and what advice do you give for entrepreneurs looking to work with more Indigenous talent and First Nations? Pretty timely question.
Absolutely, and thank you for the question. We're just in the final stages of a research report that is looking at this very question, and particularly from the viewpoint of Indigenous youth. In our view, kind of two of the biggest forces in Canada in the 2020s are the digital revolution, which I mentioned, and it's not just digital, it's known as the fourth industrial revolution, and as advanced technologies. So digital, certainly, and increasing algorithms and AI driving data and digital, but also robotics, remote sensors. I mean, you see this in in industries around Northern Ontario, where increasingly very sophisticated machines are doing the work that humans once did. Humans are connected from jobs we didn't even think would exist 20 years ago. This is going to accelerate. So major trend for Canada, the fourth industrial revolution. And then the emergence of a new generation of Indigenous youth, which is the fastest growing segment of the Canadian population. 750,000 Indigenous youth born in the last 25 years, coming through, or they've come through the school system into that economy of the future. How do we ensure there's a positive intersection, so that Indigenous youth, whether they're running their own business from their communities and connecting with Shopify and developing data strategies to sell whatever it is they create to customers around the world, or if they're developing resources in partnership with all sorts of other companies, whether it's in forestry or fisheries or mining, using these technologies, but the skills that are required to take advantage of these technologies for their own prosperity. So we have to focus a lot more of what we do in our schooling system, starting in young grades, but right through colleges and universities, to ensure that Indigenous youth are exposed to and have the opportunity to develop the skills to work with robotics, with remote sensors, with data, so that they can chart their own path to prosperity through a fourth industrial revolution. Secondly, we need to ensure this aligns with capital and technology. So it's like three legs to a stool. So how do we ensure that Indigenous communities, but particularly this next generation, has access to financial capital? That includes through wealth, through land settlements, through economic agreements that build that financial capital. It's not just about borrowing money, but build that financial capital to invest in enterprises of the future. And then the technology and the tools, whether it's in those sophisticated robotics or machinery, or the digital capabilities that I mentioned earlier. But you need all three. You need the financial capital, the technology, and the skills to really drive your own prosperity. And we're hoping this kind of inspires a new aspect of the economic reconciliation conversation coming out of this crisis.
Interesting. Okay, that's pretty insightful. Something else that came up in the question Q&A box is around nickel production, and knowing that Northern Ontario is the nickel capital of the world, as we continue to see the Chinese market dominate and have the ability to drive markets down, how does Canada position itself competitively and make sure that investors are seeing the return on investment in those large scale mining projects to get them off the ground and become that global trading partner that we so value and want to be a part of?
Yeah, it's such a great question. We could have a whole probably session on this. I'm a bit of a student of history and have read a while ago about the nickel crisis, more caused by Japan in the 1930s, and how Canada sort of struggled to address that. So everything old is new again in some ways. And I'll extend my answer to cover more than nickel, because there is a range of minerals, including rare earths, that Canada needs to think about much more strategically in the decades ahead. aligned with American industrial policy. So how do we connect in a more integrated and strategic fashion to ensure that we're not exploited, but that we are owning and developing, and this includes Indigenous communities, owning and developing these minerals that can feed into a next generation of American industry. This is about production, but it's also about refinement. Something Canadians are historically good at. How do we ensure that the value add, if you will, is on Canadian soil as much as possible, whether that is lithium going into electric vehicles or nickel going into other advanced technologies. We need to be careful that it is not, though, kind of a state-run economy, because that is maybe the logical or illogical conclusion of what I've just laid out there. And some governments might be tempted, even ultimately, and we've seen this through history, to take more of a strategic position in, especially in resources production. That tends not to be a long-term positive for an economy or for society. So how do we ensure that government is a key player at the table, using regulation, incentives for investment, but allows the private sector to do what the private sector does well, which is to find opportunity to run things efficiently and to look for those markets. We've suggested kind of a more sector-based strategic approach. So, and maybe this applies to nickel, but we've looked at this for other sectors. How do we ensure that governments, because it's multi-jurisdictional, but key governments are at the table, but key industry is also at the table, driving whatever it is the policy that we need to ensure that that sector is going to be stronger in the years ahead. So a more sectoral approach to industry strategy.
Okay, interesting. I have another question. This one's pretty complex. It talks about, I'll read it out. Flow through tax share has been seen as an effective tool for attracting and raising funds for junior companies. While increasing Ontario's rate from 5% to 25% would help, should government regulate the short sellers who are killing the value of junior stock prices and deterring investment?
Yeah, that's a very technical question.
30 seconds or less. No, I'm just kidding.
Yeah. Want to be a little careful on that, because short sellers provide an important market function, and there are excesses have been for a very long time that regulators need to continue to monitor. Let me take a broader view to the question, because it's an important one, which is how do we ensure that venture capital and junior forms of capital continue to go to the most productive parts of the economy? One of the risks that we've seen through the pandemic, with interest rates being at the very low level that they're at, is that there's been a lot of speculative capital moving into different areas, from Bitcoin to all sorts of other asset classes. That's interesting. That can lead to innovation, but can also be counterproductive when they lead to unproductive bubbles. That kind of speculative capital is important to the functioning of any economy. But how do we ensure that speculative capital, and Canada's got a long, good history of this, goes to productive sectors, be it mining or a service sector, to creation of new tech companies, for instance, in a way that rewards entrepreneurs, incents entrepreneurs, and also rewards shareholders, because Canadians need to continue to seek a balanced approach to risk. We could go on in conversation about this. There's some interesting ideas out there. Flow through shares for certain sectors is an interesting not idea, because we've got a long history of it, but opportunity to apply to some of the newer forms of the economy, but also regions that need to recover, perhaps in the resources sector, than at a faster rate than they might have in the past.
Okay, fair enough. I think I want to expand on a topic that you brushed on briefly in that response around the here it is here. the cryptocurrencies. So what do the Bank of Canada and the federal government need to consider policy-wise regarding cryptocurrencies? Despite large growing market cap, it still feels like it's a moving target sector with a lot less regulations than the regular finance market. So any sort of opinion or thoughts on that in terms
Yeah,
of?
crypto gets applied and misapplied to all sorts of aspects of finance. There's the experimental end of crypto that is, gets to the point I was just discussing, that is interesting to watch, but ultimately not terribly productive for the economy because it's not the center of financial transactions or of the real economy, and likely won't be for all sorts of reasons, principally that it doesn't have that kind of store of value that that fiat currencies or sovereign currencies have. But there is an opportunity for actually two opportunities that I think get overshadowed by a lot of the hype around certain cryptocurrencies. Number one is the underlying blockchain technology, which is significant and very productive for all sorts of data transactions, including in all sorts of organizations. Blockchain, and that, you think of those, the logger and the trucker in the forestry company that I just mentioned. Actually, they, if they're not already connected to a blockchain technology, probably will be soon, and that's going to lead to more efficient decisions for that forestry company. So blockchain technology, which underlines crypto, actually has a benefit to how we transact with each other. We see it with loyalty points related to credit cards, but it can translate to all sorts of activity within firms and between firms. So we're excited to see kind of more focus on that productive opportunity. Second opportunity for innovation is more on just digital currencies generally, and we know the Bank of Canada is very interested in this space, and there is more opportunity there to but to continue to evolve how we think about digital currencies, which makes eminent sense to all of us as consumers. But how does Canada become a global leader in that evolution is a good opportunity, and that's something that we see the Bank of Canada leaning into and should be encouraging for Canada.
Okay, great. That's helpful. I want to go back to a topic that we discussed earlier because I've got a couple of follow-up questions around the real estate topic, and a couple of our attendees have submitted questions around the possibility of the real estate prices being inflated to the point where it's not sustainable, similar to what occurred in the US in 2008. And another participant cites it as are we building a house of cards with real estate prices that could possibly be unstable? Any comments around the sustainability of the real estate market and the likelihood that it will maintain the strength that it has shown thus far?
Yeah, we don't see systemic risks in the market, although the run up in prices over the last year has been impressive, and the way it's been positive in all markets of the country is mathematically positive. That is, in all parts of the country is striking. Fundamentally, we continue to look at supply and demand. And the imbalance in that, and the demand that will continue to grow once immigration returns. We are one of the few countries that is adding 1% to our population every year. We've got 30 years of history at this, general acceptance of this, and an awareness of the economic as well as social value of that immigration strategy. So we think Canada will get back at that growth, and as Canada grows, that number grows. So we'll be adding 400,000 people a year, not 300,000, and that leads to obvious demand in the housing market. And despite our geographic expanse, we continue to see shortages in housing supply, especially for single family dwellings. So I'm talking to you today from downtown Toronto. We've got a great condo supply here, but condos, don't suit a lot of people's ambitions and needs. And there continues to be a shortage for serious single family dwellings in the country, and just not a lot of space for that in the major cities, as I mentioned earlier. So we think those forces, as well as low interest rates for the long term, or for a long term, are going to all be positive for the market. We see interest rates rising, or central bank rates rising next year, but not in a significant way as to disrupt the housing market or other demand. It will maybe provide a bit of a headwind, but really just to temper that run up in prices, not to cause any shock that some of us of a certain age may remember from the late 1980s and early 1990s. We're in a very different world today.
Yeah, the interest rates are drastically different for sure. When we think about the interest or the attractiveness of the single family dwelling and the need for more, do you think that could correlate into a focus around the talent war that we're facing, and having Northern Ontario positioned in a very attractive way to attract new talent to the region, with a more affordable housing rate, and getting out of an urban center and having that opportunity to invest and be a part of a different market in a single family home? Is that something that is likely going to have a positive impact on Northern Ontario, or do you think that will just, people will stick to their urban centers?
No, I think this is, as I mentioned earlier, I think there's a terrific opportunity for communities to present themselves, sell themselves to talent. But it's a complex decision for any individual. Weather does not tend to be on our side, depending on your preference for cold weather. But there's plenty of other aspects of community living, which includes schooling, includes safety, includes culture, and that ranges from food to music. We've seen in the United States a really interesting movement of millennials over the last decade. This is not a COVID thing, but it's accelerated from COVID to secondary centers. Places like Nashville and Austin, Texas are well known, but Provo, Utah is growing significantly, largely as lifestyle destinations for those younger knowledge workers who don't want to be in San Francisco or New York for the same pressures they may not want to be in Toronto or Vancouver. But these other centers have built up a lot of strength with music and food and culture and recreation, where people who are settling down realize, okay, I can get a much better, I can actually get a standalone home in a community, but I'm also looking for that recreation, for skiing, or for the culture and music that speaks to me as an individual that I don't find in, let's say, a San Francisco or an LA. So, be honest with yourself about what your attributes are, play to your strengths. But invest in those strengths and see who you can pull in with them. And always remember that like attracts like, and young people attract young people. So, and that comes back to that importance of colleges and universities, that young people want to be around younger people. So you create that momentum, and it tends to add to itself.
Fair enough. Thinking about the current situation that Ontario is facing in terms of the restrictions that businesses are under, and some have cited the particularly slow reopening plan as it relates to some of our other competitors, whether it be south of the border or other provinces. Any consideration of how businesses can capitalize on these opportunities, considering the current climate that is a limited scope of what businesses are typically, under normal circumstances, being permitted to operate under?
Well, we're going to have a summer like no other, and that's both positive and a bit negative, but more positive, where things will be much more open and people are going to have a huge appetite to travel. We're seeing this in the US, where car travel is now back at pre-pandemic levels, and airport traffic is, last number I saw, about 70% of where it was pre-pandemic. People are flying again; they're moving again. Las Vegas opened today, and there seem to be good crowds going there. We will have a bit of a slower opening. I mean, we already are, and we'll see what happens with the international border. But for now, I think it's safe to assume that, particularly for Northern Ontario, you're going to have a lot of people on the move this summer. And I tell you that the availability for opportunities in Southern Ontario is very limited. If you're trying to rent a place for the summer, good luck to you. Every cottage with waterfront seems to be taken or is being priced at just mind-boggling levels. So you've got here in the GTHA 5 million people who are going to be looking to do something this summer, go somewhere, and they're not going to have the opportunity probably, or maybe not the enthusiasm to cross borders or to go too far afield. What a great opportunity for Northern Ontario to say, hey, folks, come up north. If you've never been north of Superior, or you've never been up into northeastern Ontario, here's your chance for a road trip like no other. You can actually rent a cottage, you can get water space, you can have all sorts of incredible experiences. Don't think about having to go to Europe for some incredible experience. Go to Northern Ontario to see and experience this. So a terrific window of opportunity. I know lots of people are already all over this, so I'm not thinking I'm telling you something you don't know. I'm just trying to voice more enthusiasm for this, that as the masses of Southern Ontario look for opportunities, please seize on it. I think of last summer as a bit of a foreshadow of this, where we saw a lot of this, but Quebec was an interesting case in point, where there was huge numbers of people going out into kind of secondary parts of Quebec from the Montreal area because they couldn't or didn't want to go elsewhere, and that was terrific for those local economies.
Yeah, there's certainly no shortage of places to explore in Northern Ontario, and truly remarkable ones. So I hope that that people will get to realize that, or visit that if they haven't, especially to support our local businesses as much as possible. And thinking about the change in travel, do you expect a pullback in globalization, and in particular over the next decade, whether it be because there are more countries with maybe a non-democratic or anti-democratic value, and maybe some lessons from supply chains that we've learned during the pandemic? Is there any comments on that? Would be interesting to hear.
Yeah, we're certainly seeing movements in North America, Europe, and East Asia towards more national economic strategies and regional economic strategies, which is concerning. That generally is not healthy for the global economy, and not healthy ultimately for middle trading powers like Canada. But be that as it may, we have to play to that reality, which is why I was making the points earlier about feeding into an America first industrial and post-industrial strategy. In terms of travel, humans are wandering. We as a species like to wander, and I think people will want to get back to traveling, but it will be a different travel than we might have seen before the pandemic. People will want to travel probably closer to home. We'll see Americans wanting to travel more within America, Canadians within Canada. So how do we play to that advantage? Canadians tend to spend more, not tend to, this is well established as a pattern. We spend more out of the country than foreigners spend in our country on travel. So while Canadians are more inclined to be at home, back to my point about us crowds in the GTHA, maybe needing to get up into the north more. How do we get Canadians spending more in Canada on travel, and then work on getting more Americans to cross the border? Americans are often reluctant to leave their own country, but we're as safe as can be for most Americans in terms of travel. It will still attract people from other parts of the world because of all the great reasons to come to Canada, but we may need to take a bit more of a Canadians first and then Americans next strategy to travel.
Okay. And just to expand on that, one of our attendees has posed a question around your book and sort of the impact of the Canadians living abroad. If you can talk a little bit more about the financial or possible diplomatic influence that these Canadians abroad have. First impression is that the population isn't big enough to throw their weight around. But maybe you can offer sort of some of the findings of your book in a brief way that could table some of the trends that you're likely to see.
No, absolutely. Thank you for the question. The book is called Planet Canada. You can get it from Indigo or Amazon or your local bookseller. And it looks at the population of 2 to 3 million Canadians who live, work, and study outside of the country. So almost 10% of our population that we take for granted. And I've called them our 11th province. And we need to think of them as a province, as a part of Canada. And how do we work with them strategically? We are the only country, and I studied and worked with a research team at the University of Toronto on this, the only country that does not have a serious strategy to work with its global population. And I argue in the book, how do we act a bit more like Israel and Singapore or Taiwan, who work with their global populations for their strategic advantage? And this is something that communities and regions can work on. It's not just a national strategy, although I've been pushing for a Canadian strategy on a global population. So how do you, if you're in Sudbury, how do the people of Sudbury identify all people from Sudbury who are now living, working outside of the country, and develop a database, but also networks? We live in an age of networks where those people who are probably have an affinity for Sudbury, a loyalty to Sudbury, just as an example, wanting to work for Team Sudbury to build up particularly your economic strategy. I do a lot with a group of Canadians in Silicon Valley called the C100, which is a terrific network that's plugged into all sorts of groups in Canada. But how do you plug into a group like that whose membership would include Canadians from Northern Ontario who are now doing all sorts of interesting things in Silicon Valley to start to work on your region's strategic interests? So back to that digital revolution, how do you get them to join your team to help identify partnerships for you or opportunities for you? So this is that kind of strategic approach to networking that we as Canadians need to get much, much better at in the years ahead. We got the people out there. They network among themselves. They network informally with friends and family back here, but we got to be more like Israel, Singapore, Taiwan in really reaching out to them and getting them to join our team.
And we know we just received the census that was mailed out. I wonder how to capture more of that data outside of the traditional method. Something to think about for sure. I don't know if you offer an answer in that. Maybe that's a plug-in to go read and look.
Yeah, I'm still perplexed at getting that census form in the mail. It was a bit of a throwback.
Yeah, it was something. It seemed to, the announcement came and it seemed to arrive maybe the next day. It was my experience.
Yes, yeah.
It was pretty timely. And thinking about some of the, going back to an international lens, Biden appears to be close to agreeing to a global corporate tax minimum with the G7. What impacts do you see this having on Canada?
Yeah, this is something Canadians have been working on for a long time, and is probably a net positive for Canada. Tax arbitrage tends not to be good for a higher tax jurisdiction like Canada. It just also undermines the fairness of the system for all of us as taxpayers, including corporate taxpayers, but also for public confidence in the economic system, which I worry a lot about. That when we see a rise of populism or angling for socialism in different countries, it's often because good people, smart people, have lost confidence in the economy to self-regulate or to behave according to what people think are the rules and norms, and that includes tax fairness. That also will hopefully help get towards tax fairness in the newer parts of the economy, which Cora, you were asking about earlier on how to modernize rules and regulations for the platforms, and taxation is a clear part of it. I think they want to be part of a fair system, but as we all kind of live and transact more on platforms as much as on Main Street, how do we ensure that there's tax fairness there as well, since the platforms are less bound by traditional borders than other parts of the economy.
Okay, thank you for that. I think we have one last question in the chat box, and I think this could be very relatable to what everybody is coming to listen in on today, because most of us are joining from working at home, and this question relates directly to the working at home climate, in that it asks, how does working from home impact professional development? Do you lose some important knowledge transfer when seasoned employees aren't engaging in informal conversations around the office? And what type of impact does that have on the economic prosperity of a business?
Yeah, what a great question. One of the concerns we've raised in some of our research is the loss of IQ in the crisis, and by IQ we mean the innovation quotient, not the intelligence quotient. And innovation is a team sport. It's a group activity. People don't innovate on their own. We've got a research piece coming together on creativity as kind of the it skill for the recovery. And creativity is really the fuel of innovation. But creativity, we've seen this through history, but we're seeing it in all sorts of sectors. This is not about arts alone. We see it in the resources sector. Creativity thrives when it's between multiple people, and we're all creative people. We just have creativity expressed in different ways. So if you're a forestry company or a small business or a hospital, how do you harness the creativity of your talent? Harder to do when people are not together. Not impossible, but just harder, because we brainstorm, we interact, we riff off each other, we seize on the unplanned. The hallway conversations are so important to creativity. The whiteboarding literally is great for creativity. So as we move back to, as I was mentioning earlier, probably more hybrid work environments, how do we ensure that when we are together, we are creating those creative, magical opportunities? That people aren't going to the office just to catch up on their email. You can go do that in your basement. When you're in the office with others, or when you're in the mill with others, of course there are certain functions you have to be doing, but how do you seize on that moment? And I think as employers, we need to take a moment and say, let's create the magic for that creativity to flourish. Let's make workplaces desirable to go back to. I was talking to another business thinker a few weeks ago about this, who said, we need to be thinking about the food and the music. Food and music are what drive everyone. So how do we ensure that there's music, like have a band in the lobby, or have good food if you're able to provide good food, because that's going to get people wanting to come, and then they start to interact and create with each other. So we have to make the office, make the factory, make the shop, the store magical again for people to come to, not a drudgery place of drudgery. But then how do we help people also innovate from a distance? Because not everyone is going to want to be in the office at the same time. There's all sorts of tools that most of us have not gotten good enough. We're all good at Zoom, but this is not necessarily great for innovation. How do we get good at digital doodling, at brainstorming through digital channels and include people. This is going to be a big culture shift, as well as a requirement of technology in the years ahead, and is going to be a strategic advantage, because if you as an employer get exceptionally good at this, people are going to want to work for you and they want to stay with you. It's not just about driving your own innovation, of course, but it's about talent, attraction, and retention. Last point gets to the origin of the question, which is about mentorship. And this is something that's really been lost in the crisis. I hear this from younger employees. I hear this from people in other companies. And we all remember this from our early years in work. Being in an office, being in a collaborative work environment is magical, because you're learning from others. It's not just about brainstorming, you're learning, and that's what mentoring is really about. And as people come back in a hybrid fashion, I suspect younger people are going to want to be part of that, for the socialization and for the learning, kind of that soft apprenticeship aspect of work that is so valuable to people in their early years. How do we encourage other people, older people, to want to be part of that, to see themselves as part of that mentorship, whether it's from a distance through a hybrid model, or them being in the office or the workplace or the premises, to be able to share, mentor, develop, and then innovate with people at different ages and stages. So all to say, workplace of the future is going to be different from what it was in 2019. It's going to be different from what we're doing in 2021, but it's game on and up to all of us to innovate with the way that we work. But those of us who create these new work cultures, invest in new work tools, find ways to collaborate in person, but also collaborate from a distance, are going to be at a real advantage to our competitors, be those your competitors across the street or those competitors who you've never met from around the world.
It kind of begs the question, is Northern Ontario well positioned for this decade of change? And if we're not, what do we need to be doing differently?
All of us in every corner of Canada need to up our game. What we thought was a success formula pre-pandemic is not going to be the success formula post-pandemic. We're really good as a country at all sorts of things, but we saw change over the last 12 months that many of us thought might take 12 years. And that pace of change is not going to slow down. And we're seeing firms, regardless of sector, countries, regardless of region, who are accelerating with these changes. So all of us have got to, we may feel exhausted from this, so take rest when you can get it, but understand that the pace of change is going to continue to accelerate. The advantage is that is your advantage, that you can now set a pace that can become the pace of the world. You can see the world as your market, and you can start to do things coming out of this pandemic that may not have been quite as easy to do pre-pandemic, but make sure that you're taking on those opportunities very quickly, because competitors from every corner of the world aren't going to be waiting to see to follow what we're doing.
Interesting. I think there's a lot that participants here today can take away from, especially considering the opportunity that Northern Ontario has in the sense of commodities, and the opportunity that's available to attract talent in a different way, considering the changes the pandemic has posed on the way we operate. So with that, I want to thank you, John, for your very insightful Q&A, and the audience members for submitting some pretty challenging and insightful questions that provoked some great places to go look and reflect on in our own organizations. As a token of our appreciation and in acknowledging you for joining us today, the Chamber will make a donation in your name to the Greater Sudbury Chamber of Commerce's post-secondary student bursary fund. So the monies collected in this fund are distributed at the end of each year in the form of a bursary to deserving students at each of our member post-secondary institutions. and certainly reinforces the comments here today that the youth will drive the economy forward. And before we conclude,
thank you for that.
Yeah.
That's very heartwarming. Thank you.
Well, we're hoping that they'll remain here in Northern Ontario. And before we conclude, allow me again to acknowledge our generous sponsor, Intercity Industrial from Thunder Bay. And we wish to acknowledge our sister chambers for your support in co-hosting this great event. Thank you all for joining us today. We really enjoy the day, and thank you for your ongoing support and the activities that you contribute to and help our chambers function in the way that they do to serve all of our members. We wish everybody to stay well and all the very best for the rest of the day and week. So thank you again, John, and to our members.
Thank you, Cora. Thanks everyone for joining. Stay well, stay safe, and hope everyone has a wonderful summer.
You as well. Thank you.
All right, see you soon.
Bye-bye.